And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show. And this is the show where we bring you where the action is in the broader markets. And as always, with an eye toward preparing you for next week and beyond, always with the goal to outperform these markets. So let's go ahead and get started. I'll share with you our agenda for today. We are, as usual, going to take a look at the broader markets. Where are we standing at this point in time? We'll drill down further beyond that, of course, as well, peek behind the markets and drill down. Also, candidates in a strong group. This is one group that is just continuing to almost silently, but it's really outperforming and it's back in favor again this week. So we'll take a look at some of the better candidates within that group. Also, base breakouts, my favorite, as well as downtrend reversals that are taking place. And then also areas this week that ended relatively strong. It's been kind of an unusual week. I think this will be revealed as we dig in a bit further. Not your typical overall trending period, a bit spotty at best. We could be in the beginning phases of this summer period where there's just not a lot of strong direction, but we'll get more into that. As always, I do want to share some of the more impactful headline news that did come out this week. Earlier in the week, we did hear about the Chinese government intercepting, and a number of internet companies did face stiff fines, primarily for listing in the US and other reasons as well at their citing as security. And that seemed to really dampen the markets in the beginning period of this week. We did see the Fed minutes out on Wednesday, and the comments were really quite positive, although the information is from last month's meeting, but it did point to the Fed not really feeling compelled to act quickly as far as shifting their accommodative policy. So quite positive there. We did see weekly jobless claims rise, but it was ever so slightly, nothing concerned about. So that was more bolstering or certainly positive news for the markets. May consumer credit did rise 10%. This is good news in the sense that consumers are back, and we'll share some intel or further insight into some areas there as well. Next week, core CPI, consumer and producer price index. This is all about inflation related data that's going to be released. In addition, industrial production and retail sales, other numbers that are also looked at. They have been certainly in the past, so we'll see if we get any kind of volatility based on what these numbers reveal. So let's go ahead, take a look. Here we are, a daily price chart of the S&P 500. And for the most part, we kind of bounced around a bit here. It was very flat. The S&P did end the week up a little less than 0.5%. The good news is we did eke out yet another new high with that 0.4% return. And then we can take a look at your outside momentum indicators. We can see that the RSI did dip back out of that overbought position. That's something that I like to see. So that is certainly good news. Stochastics still up here, another momentum indicator that can be really useful when you're looking at sectors and industry groups. And we can see it's a faster moving momentum indicator up here in positive territory. So net, broader backdrop looks constructive. So from here, let's go ahead, as we usually do, and take a look at the underlying sectors. These are going to be the 11 S&P 500 sectors, as well as the S&P index. And I went ahead and added this RSI. That's a relative strength indicator, descending order. And ultimately, we want to see where that strength is on a relative basis, of course, as always, with an eye toward helping you, or you ideally, hopefully, you want to participate in these areas that are up here in the forefront. This is where the strength is in the markets. And then, of course, as we drill down further, you can see some of these weaker areas. But let's go ahead and get started. Discretionary was up 0.8, so almost 1% for the week. However, I do have to temper that a bit because Amazon is such a heavyweight stock. Amazon was up 6% this week on news. So I promise you I dug in. I want it more to be working within discretionary, but there are other pockets, and we will be able to get to that. Technology up almost 1%. This is another area where that heavier weight name is really going to have a bearing. That's Apple, up almost 4% this week. But there were other underlying pockets of strength in tech that we're going to get into as well. And then healthcare really holding up quite strongly up here in the forefront. I know with my MEM Edge biweekly report, we have three healthcare medical product stocks that just keep powering to new highs. So if you can really pick those sweet spots, you can take advantage of the move into, or if you haven't trialed, go ahead and use that link below. A 4-week trial, biweekly report, $7. So urge you to do that. So here I talked to you about an industry group that has been really strong, pulled back into favor this week. And this is where I'm going to be sharing with you some candidates. This is the real estate sector REIT stocks, up almost 3%. So we can see this nice advance here, May into mid-June, pulls back very orderly, and then a nice base breakout, setting up for a potential another leg up. And this is all about the reemergence of certainly the recovery in the economy. And we're going to get more into that as far as individual stocks. But of course, we would be remiss. Well, let's go ahead and look at industrials, because this is an area that I have been waiting to potentially come back into favor. Of course, cyclical stocks in this area. And we want these cyclicals to come back into play to join the growth stocks that have been outperforming as all ideally more groups that participate, we can see a continuation of this rally that we've been experiencing. But let's go down to some of these weaker areas and get a sense for whether they are ready for prime time yet. This is financial stocks. They've really been hurt quite a bit by interest rates, which have really declined. We did see an uptick in rates today that helped push financials up 3%. A lot of bank stocks, not a whole many, or not a lot of them, are back up above these areas of resistance just yet. Not a broad-based rally, but certainly one worth noting. So let's go ahead from here, and beyond these sectors, what I want to do is take a look at some of the sub-industry groupings. So from my work, I do traffic in higher growth stocks. So I do have a predisposition to look at some of these individual areas within technology, biotech, not necessarily growth, but certainly faster moving stocks in that area. So again, that RSI indicator added descending order. I'm going to go ahead and update that and share with you quite quickly, because we do have the S&P, we have the NASDAQ, small caps, and the Dow. The Dow had a good day today, of course, with those financials and a couple of industrial names rallying. But up here in the forefront, it continues to be the NASDAQ. This is all about that move into growth stocks that looks very firmly in place. And then from here, a sub-industry group within tech is these software. This is a software ETF, IGV, and it was up almost 1%. So double certainly what the broader markets were up. So continued vibrancy among these software names. And as we continue to move on, I did mention in our agenda for today that I was going to share with you groups that pulled back but ended the week strongly relatively. And one of them is biotech stocks. They were down quite a bit this week, well over 2.5%, I believe, almost 3%. But take a look. They ended the week down only 1%, buyers coming in on the dip. Your momentum indicators never turned negative. So I like this because it's indicating certainly confidence among investors in the broader markets. A lot of these biotechs don't have earnings, but there's also an awful lot going on with the FDA, with approvals taking place at a very rapid pace, and other news certainly relating to Bellwether Biogen, among others. So let's move on here because I did want to quickly just point out the dollar. The US dollar ended the latter half of this week down, and that, of course, in turn helped push some of the commodities and energy stocks today. So that's certainly worth noting. We did get a pullback here in software stocks, down almost 1.5%, but seemingly buyers coming in on the dip. No real negative action on that RSI. So that's something I'm going to be reviewing quite a bit further in my report this weekend, because we have a number of very strong semiconductor stocks on our MEM Edge suggested holdings list that I'm really going to want to know what we can anticipate there. Brent crude oil pricing still up in that $75 range. This has been a bit bumpy because the OPEC meeting where they decide production levels still at an impasse. But today, very strong oil usage numbers were reported. And one last area, we can just take a quick peek here. This is the regional banking ETF. I talked about financials up over 3%, but regional banks up 4.5%. Realistically, though, we are still in this downtrend, so not quite ready. Something, certainly my work, I will stay very on top of. We have had some big winners in these bank stocks. I'll just go ahead and pull this up again because we initially put a number of bank stocks on our suggested list back here in November. We were able to capture significant gains, so potentially on the lookout for a reemergence among those bank stocks. I am going to take a very brief break here. As you can imagine, a fair amount to cover, so we will be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I am going to begin this second half by taking a look at some of these stocks that have had big runs and peaked in price, but are potentially now reversing their downtrends. So first up is Yum Brands, YUM, a big restaurant chain, and or actually they're not a chain, but they own a number of restaurant chains. And we can see that the stock did peak in price back here at the midpoint in May, and since then has really struggled. A lot of times when these big winners, if you will, get into an overbought position, it's only natural that at some point you will at the very least see a pullback, in this case, quite a lengthy pullback. But let's take a look at the current dynamics with this stock. I'll go ahead and point out some characteristics that make it compelling, certainly worth putting on your radar. RSI now back in positive territory. The big difference, let's just go back here where it did occur back here as well. But there is a key component that is very different at this juncture than it was back in the beginning of June, and that is this MACD. Take a look, your moving average convergence, divergence, two characteristics you want to be on the lookout here for. One is that black line up through the red. The other is a break back above, well, actually, we're focusing on the MACD, a break back above this net neutral zero. So here we are, we got that nice crossover that is indicating that this downward momentum has shifted. Once we get up here above this net neutral zero, that will provide further conviction. So that's the big difference. Back here, we did not have that downtrend reversal on the MACD. So much more compelling picture here. Of course, we're still a good 3 weeks away from earnings season, but there may be other impetus that are driving. Certainly, there are bright spots among restaurant stocks as individuals, consumers are eating out more, getting out and about. Another retail related potential downtrend reversal here, actually it has reversed its downtrend. This is floor and decor. Now let me go ahead and pull up a bit of a longer term, more orderly looking chart. More to point out that it has been quite a big winner. This is all about stay at home, nesting, improving your home, but it is now reversing its downtrend. And certainly there's still quite a lot of movement in new home purchases and so forth. So a lot going on with people improving their newly purchased homes. So we can see the stock has broken back above these simple moving averages. Your MACD is now up above zero, trending upward, and then you have positive momentum here on your RSI. So just a couple of other names here that I wanted to share with you, put on your radar for the potential downtrend reversal. We can take a look at Honeywell, HON. This, of course, is an aerospace building technology, one of the names with the industrial space. So you'll see a lot of those same characteristics because these signals are what they are. We can see the RSI now up here in positive territory has seemingly broken above that 50-day, and then we did get that MACD crossover. So we're still a little early, a couple of more signals, MACD up above that net neutral to really give conviction. A little more volume would be helpful as well. So I did want to move on because there's a lot that I did want to cover with you. I talked about stocks breaking out of basis. For those of you not familiar, I was with William O'Neill and Company for 15 years, and that of course, founder of Investors Business Daily. So all about base breakouts, saucer bases, cup with handle base breakouts. So when I see them, I certainly like to share them. I'll share with you a name that has been on the MEM Edge list. For those subscribers that are out there, a big hello. This is PayPal. Now let me just this one, trying to see, I think we may have identified this certainly on my report as emerging out of a cup with handle base. Let's just see what we have. Yeah. So what we have here, when you're looking for that cup with handle base, a stock hits a new high in price, pulls back, and then as it approaches that prior high, you don't want it to quite reach that. Oftentimes what may occur is this cup with handle base. And so we have this cup formation. Here is your handle, and they can take any number of shape. In this case, it was a back and fill. And then in order to confirm that breakout, you need to see the stock's price break above that handle high in price. And it did so today. So nice cup with handle base breakouts. I know Let's take a look at another one that is another potential cup with handle base breakout. We're not quite there yet. This is Upwork. They do provide a platform of freelance workers, and it was a big winner, of course, during that pandemic, but they do still have strong growth prospects. It's a part of the economic ecosystem that is here to stay. So we can see where here we have that saucer type formation. Let's take a look at the handle portion and see what we are going to be on the lookout for. You don't necessarily like to see it break below, but we are still going to be on the prowl for a break above that high point for during this handle formation. A break above that level in volume would be quite constructive for Upwork. Let's look at a couple of other names here that are looking interesting. Certainly autos, and I know everyone's well aware of the auto, how the sales have really gone up. There are certainly, I know a couple of people that are patiently waiting to get their vehicles that they purchased. So this is CarMax. They are, of course, well known for their sales of used vehicles. So it's not just new vehicles, it is across the board. So a pretty significant pullback here. So it's not going to be as interesting, certainly, because we went from this 140 down to 110. But at this juncture, we are poised to break out of a base with positive momentum indicators. So worth noting, another used vehicle sales company is Carvana, CVNA. This is all online as far as your, for the most part, sales purchases. I'm going to pull up a longer chart here just to smooth out some of that bumpiness. But we can see here more recently, it's poised to break out, not overly exciting, but certainly worth noting. And a couple of stocks here that are in the process of forming the right side of the base. This is something certainly I am always on the lookout for as far as, again, this downtrend reversal type phenom. Is it going to carry forward and improve and increase? This is Allstate, ALL. Closer inspection right now, not overly dynamic, but I'll keep it on that radar among those financials. Another name that we can take a look at is among the financials is wealth management. A number of these wealth management, asset management firms have really seen terrific inflows of assets. And so this is another one not quite ready for prime time yet. We can see these indicators just maybe starting to potentially turn around, but not ready. I'm going to go ahead and move on, and we can take a look at, I talked about REIT stocks really coming into play. So let's go ahead and do this first. Go ahead up to this first page interface here on StockCharts.com. And you can really put this layout as you desire. I am all about looking at that sector summary very religiously, certainly on a daily basis at the very least. Some of these other items you can do are what are called Scooter, that StockCharts technical rating. I want to see those that are up the most on a daily basis, large cap as an example. And then from here, you can go ahead and pull up a candle glance. I'm going to do that because there is a stock here I had intended to mention, and that is Snowflake. I'm not sure if yeah, so here we are. This is a stock that did break out of this very lengthy flat base, but the bigger item here to me is the tremendous volume that the stock saw. So perhaps keep your eye on this one, could continue to see further upside. But let's get back to that sector summary and how you can utilize it to get in front of areas that are showing superior strength. So here we are. We're going to look at the 1 week performance here up here in the forefront. I talked about the group being up to over 2.5%. And we can see real vibrancy here in residential. So we did have a big week this week, but also if we look at this StockCharts technical rating, residential REITs are up here in the forefront. This is all about the improving employment picture, people getting back to work, these residential, a lot of apartment and otherwise REITs, they don't have that fear of as far as rents not being paid. And so there's been a nice pickup. So here's one name in that grouping, EQR. Just going to mark this up here and share with you what I am seeing. I talked about base breakouts. So we did have a nice base breakout this week. The stock, a lot of the actually every REIT stock does offer yields. They are mandated to pay out 90% of their funds from operations to the shareholders. So here we can see that we had that nice base breakout here, very orderly, your RSI trending upward, but take a look, that MACD just having that black line up through the red, crossover, quite constructive. Another stock that we can take a quick look at here is a name that was a big winner for my MEM Edge report a while back, and it's come back into favor. This is Sun Communities, SUI, another nice base breakout as it powers to new highs. They do provide manufactured housing to senior, mostly senior communities. Not a big yield, 1.8%, but certainly one of your better performing REITs. It's interesting that the group is up, but it's a very have and have not type of industry grouping at this point in time. But another nice breakout, this is AVB, one of the biggest as it relates to apartment communities, 272 communities across the US, 2.9% yielder, and it did have this nice base breakout. When you have these stocks that are really far exceeding the broader markets and in these confirmed uptrends, it can be really helpful to put in this 5-day simple moving average, and you'll see that that is acting as your area of support during this uptrending period. Currently, we are well above that, so would not ever recommend chasing a stock. You're going to want to call and look for that stock to pull back to support. This is a stock a bit more in a potential turnaround, APTS. It's a smaller cap name, but a 6.9% yield. Let me share with you how you can actually get that yield number here. I just clicked on full quote, and up here it does actually it shows 3.3 on this, so you may want to double check the screening service I was using showed double that. But more to the point, as it relates to the chart, we can see that it is poised to reverse this pullback here. So break above that pink 21-day simple moving average. If we can get that nice black line up through the red, indicating this downside momentum has shifted, this would in fact be a nice candidate. I'm going to move into industrial REITs, share a name there that you can certainly have on your radar, a 2.1% yielder. This is Duke Realty, and I'm sure you're going to see what I see, this nice base breakout that took place today. But even more importantly for my work is this nice crossover here, indicating a shift into upside momentum for the stock. One other name, a company that traffics, or actually their portfolios in the REIT space, is Data Centers, DLR, so kind of a technology hybrid REIT, and did really power up here to new highs, had a pullback, but we are in the throes of reversing that downtrend. And again, this MACD poised to turn into upside. This particular company does offer a nice 3% yield. So I am going to leave it at that. Again, go ahead, use that link below if you'd like what you viewed, hit that like button. And as always, those of you who have not already, you will want to take a look at my MEM Edge report to keep you even more fine-tuned and in front of the markets. Lots I'll be covering this weekend. You can get Sunday's report right to your email. And that's it for this week. Everyone have a great weekend, and I will look for you next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.